you have really been hitting all the marks with your ETF lens on this commodity investment, making a ton of money over the last couple of years for your clients and for investors. But yesterday we saw some incredible volatility. What do you think caused gold to spike up through 5,500 and then drop back down through 5,000?
Thanks a lot, Matt. It's great to be here again with you. The market was really excited about gold and silver, given the debasement trade over the last couple of weeks that really was driving up the speculative element of this. And today you're getting the wet blanket of the Fed nomination and the dollar rallying. And because of that, you're seeing a pretty significant pullback. To us, this is a healthy sell-off and a healthy correction within the context of a much longer-term secular bull market, not only in precious metals like gold and silver, but also, as we call it, the tangible areas of the market, which are broadly commodities, including energy, including other base and industrial metals that are really going to widen out and become a full-blown commodity supercycle over the next several years.
So you're still a buyer at 5,000. I know your ETF has basically doubled since its inception. Do you continue to pile into this strategy?
Yeah, so that's a really good question. So day before yesterday, it was our 1-year anniversary for the ETF. And what a day to mark the 1-year anniversary. We hit 100% return. In terms of the positioning, we're actively managing everything that we have in the portfolio. We have some sub-themes, and gold and precious metals and silver and the mining stocks of those companies, they reside in our geopolitical and fiscal risk sub-theme. And then we have our energy is life sub-theme where we have oil and gas companies. And then we have our build the future sub-theme where we have other companies like copper miners and platinum miners and iron ore miners. So to answer your question, we have been heavy overweight in gold and silver running up to this. And as early this week, we were actually trimming some of the positions in that space to reallocate back to energy, which look much more attractive. So we're actively managing these exposures. Gold, silver, and their mining companies still remain a large part of the portfolio. A few years ago, the portfolio was much more overweight in energy, and we switched that around in mid-2024, late 2024, and that's been a great call. And we think that the next year or towards the second half of this year, energy might be the bigger play, and so we're actively managing those exposures. Currently, we're still overweight from our secular view on gold, silver, and their mining companies, given the geopolitical and fiscal risks that are still front and center.
So that's a great clarification. So you're not necessarily married to the metals. You could go to other assets, and I noticed that you can operate in all different regions as well. Are you always,
Yep.
You're always talking, though, dollar-denominated assets, right? So the dollar debasement trade that you mentioned at the top has to be something you're watching really closely. What do you make of Kevin Warsh as a new Fed head, and what do you make of the sell-off in the greenback?
Yeah, so today is a rebound in the dollar because of the news, and this is the initial market reaction in our view. I've been in the industry long enough, and you've been covering this stuff long enough to know that the first day move isn't necessarily the permanent move, and so in our view, the dollar bear market is still intact. It will take several years to really come to its fruition. We are not necessarily in the de-dollarization camp. We've sent you some charts. If you look at the Dixie going back several decades, there have been about 3 different bear markets in the dollar since the 1960s, and we think we're in another one for now. But as you know, secular bear markets still have moves on a short-term basis, so we could get a rebound in the dollar, some strengthening, not just on this news, but potentially if we get an economic slowdown and there is a bit of a flight to safety and people are concerned, you could get a rebound in the dollar. Having said that, on a longer-term basis, we still think that a dollar bear market is still intact.